The Iraqi Dinar today. Latest news for those who have been tracking the economic reforms within Iraq and the potential for a currency revaluation. The current moment represents a subtle yet profound shift from mere speculation to structured anticipation. This is not just another cycle of unverified chatter. Rather, it is a period where observable indicators suggest a calculated move toward major currency adjustment, particularly as we look toward the potential windows in 2025. The entire framework of the Iraqi economy, guided by the Central Bank of Iraq, CBI, and its international partners, appears to be aligning for a change that has long been the focus of global currency markets. Understanding this unfolding process requires a look beyond the daily fluctuations and into the deep-seated mechanisms of coordinated economic transition. The fundamental change we are witnessing centers on a meticulously planned, two-phase activation strategy designed to introduce a revised Iraqi Dinar IQD rate with minimal disruption. The first phase, which reports indicate has already begun quietly, is entirely focused on internal restructuring. This is the critical foundational work that must be completed domestically before any global activation can be safely initiated. It is a period of recalibration where Iraq's central financial architecture adjusts, creating an internal equilibrium for the new value. This includes crucial steps like adapting domestic contracts, government payroll structures, and local banking systems to operate under a new, revalued framework, essentially preparing the groundwork for the rate to become functional within the country's own borders. The second phase is the one that captures the world's attention, the global market connection. Once the internal systems are stable and the domestic rate is firmly established, this second switch will activate, making the new Iraqi Dinar rate officially visible and tradable across international platforms. This synchronization will involve global banking networks and major foreign exchange forex markets, transforming the IQD from a purely domestic currency into one recognized and operational on a worldwide scale. The measured two-step approach is a deliberate mechanism to avoid a sudden, chaotic revaluation that could otherwise destabilize markets both regionally and internationally, safeguarding against shocks and protecting the necessary liquidity required for a smooth transition. A strong, compelling indicator of this domestic recalibration phase is the reported introduction of smaller denomination banknotes. In the world of currency revaluation, the printing and circulation of smaller bills is often a significant sign of impending or ongoing rate adjustment. Logic dictates that a currency whose value is decreasing requires larger denominations to handle transactions, whereas a currency with an increasing value needs smaller bills to facilitate everyday commerce and change. The quiet appearance of these smaller notes suggests that the internal valuation adjustment is already in progress, working to normalize the domestic economy around the anticipated new rate before the external world is officially brought into the fold. This domestic soft launch is strategically designed for internal readiness and control. Government contracts, salary disbursements, and key local transactions are reportedly being piloted using the new value framework. This measured approach allows the Central Bank of Iraq to meticulously test the integrity of its new monetary policy and gauge the market's response within a controlled environment. By ensuring internal stability first, the CBI minimizes the risk of inflationary spirals or other detrimental economic side effects that often accompany large-scale currency reforms, providing a secure bridge to the forthcoming international integration. Once the internal architecture is fully robust, the focus shifts entirely to the international rollout, bringing major global financial institutions into the equation. Across the United States, Europe, and the Middle East, high-tier banks are reportedly engaging in system updates and sync protocols to prepare for the new currency data. This extensive preparation covers all facets of global finance, including updating forex trading screens, establishing liquidity pools, and reinforcing the essential infrastructure for foreign currency exchange. In essence, these institutions are preparing to officially recognize and transact the Iraqi dinar at its updated value on a global scale. The coordination among these top-tier financial entities, including well-known names like Chase, Wells Fargo, and HSBC, is a key structural sign of an imminent, yet controlled release window. This is not based on speculative rumor, but on structured operational sequencing designed to manage the high volume of anticipated exchanges without overloading or crashing critical banking systems. The plan involves a phased activation, where the new rate may first appear at a few major, authorized banks and gradually cascade outward to smaller regional branches and centers, ensuring a manageable and orderly global activation. When this meticulously structured international activation window finally opens, holders of the Iraqi dinar should be prepared for two primary exchange options. The first is the standard public rate, which is the straightforward, publicly listed rate visible on Forex platforms and at bank counters. This option provides a universal exchange accessible to anyone who presents and verifies their currency. It offers simplicity and immediate access to exchanged funds, often without the restrictive terms associated with other options. The second option is the contract-based rate, which may be offered to individuals holding larger amounts of the currency or those who have pre-registered and secured appointments with select institutions. This contract rate is often presented as a potentially higher payout, but it is important to note that it typically comes with supplementary conditions. These conditions might include limitations on the immediate withdrawal of funds, requirements to keep capital in a managed bank account for a specified period, or adherence to other banking requirements in exchange for the premium rate. A crucial point for all holders to understand is that the contract rate is not necessarily the superior choice for everyone. While the higher numerical value on paper can be attractive, the standard public rate often provides full, unrestricted access to the exchanged funds immediately. The decision between the two should be a clear-headed comparison of the terms and conditions associated with each. It requires a calm assessment of personal, financial goals, whether immediate and unrestricted. Access to capital is preferred over a higher potential payout with associated banking requirements and holding periods. The preparation phase for dinar holders is currently paramount. While the precise global activation day remains unknown, the necessity for readiness is immediate. Waiting until the official announcement to gather necessary documentation could lead to unnecessary delays. Essential steps include ensuring that all forms of official identification, such as passports and driver's licenses, are current and valid. Furthermore, any receipts or verification slips from the purchase of the dinar should be organized and stored safely to confirm the currency's legitimacy to the exchanging institution. The importance of compliance during the exchange process cannot be overstated. When a holder goes to an authorized bank to exchange, they will be asked fundamental questions regarding the source of their currency. This is not intended to be an interrogation, but is a necessary component of the bank's adherence to international anti-money laundering, AML, and Know Your Customer, KYC protocols. A transparent and straightforward answer, for example, that the currency was purchased as a long-term holding from a licensed dealer is generally sufficient and facilitates a smooth transaction process for the bank and the customer. Regarding the overall timeline, the first internal phase of Iraq's currency reform is quietly underway, placing the global community in what experts refer to as the transition zone. This is a state of heightened readiness, where the focus shifts from pinning hopes on a specific date to maintaining acute awareness of structural changes. Once international banking systems go live, the process will not be a single, sudden flip of a switch, but rather a cascading rollout that happens in waves, starting with major financial hubs and quickly expanding outward to all other institutions within a matter of days. The necessity of this staged and deliberate approach is rooted in Iraq's overarching goals for long-term stability and global trust. The currency revaluation is far more than a simple rate adjustment. It is a full-scale economic reset designed to reposition Iraq as a strong, credible player in the modern global economy. A chaotic release would severely damage this credibility. Conversely, a staged and controlled rollout demonstrates to international investors that Iraq is capable of managing liquidity, stabilizing its markets, and adhering to transparent financial protocols, which are essential for attracting foreign investment and stimulating economic growth. For those who have navigated years of misinformation, false dates, and unverified leaks, the current structural indicators signal a different kind of progress. The alignment now is one of coordinated readiness. Banks are testing their systems, international protocols are syncing, and structured liquidity management plans are in place. This convergence of operational preparedness, rather than rhetorical promises, is the distinction that marks 2025 as a period of genuine, observable progression toward execution. The long wait for a structured framework appears to be reaching its culmination. Therefore, the best possible course of action for every dinar holder remains a commitment to informed patience and organization. It is vital to avoid impulsive decisions driven by unverified social media hype or unconfirmed rumors. The moment of activation will require clear thinking. Once the first credible confirmations of live rates emerge from authorized banking channels, the correct action is not blind panic, but a steady verification of the terms, followed by a confident and well-prepared execution of the exchange plan tailored to individual goals. Further insight into the mechanics of the rollout suggests a regional priority sequence, meaning the most prominent, Tier 1 financial institutions are likely to activate their exchange windows first. Smaller banks and local branches will follow shortly thereafter. This phased sequence means that if a holder's local or smaller bank has yet to confirm any details, it does not signify a missed opportunity. The activation moves from the top tier down, a natural and necessary sequence to manage the initial surge in volume and ensure that the highest capacity systems are tested first. It is crucial to appreciate the global magnitude of this event. The revaluation of the Iraqi dinar is not just an internal Iraqi financial event or solely about the currency holders. It represents a significant global economic shift. When Iraq's rate officially adjusts to reflect its foundational economic strength, it will send a powerful signal across international markets, attracting foreign direct investment, reopening major trade routes, and stabilizing regional oil and infrastructure agreements. This financial recalibration has ripple effects that extend far beyond Iraq's borders, signifying a return to financial stability for a major Middle Eastern economy. As this complex, multifaceted transition continues to unfold, awareness remains the most potent tool. The speed at which events can move once the international switch is flipped should not be underestimated. Banks could commence appointment scheduling, official notifications could be released, and forex rates could update within hours of the global activation. The decisive factor for a smooth transaction will be having documents prepared, a calm and rational mindset, and a clear, predefined plan. Those who prepare now will be positioned to navigate the exchange process most efficiently when the window of opportunity opens. In summary of the current operational reality, the Iraqi two-step rollout framework is demonstrably underway. With the domestic financial recalibration phase already in motion and the international activation system reportedly on standby, global banks are continuously running readiness tests, signaling that the exchange window is being prepared for a structured, controlled sequence. Exchange options will bifurcate into standard public rates and potentially higher contract-based rates, each with different terms. The preparation remains fundamentally simple. Valid identification, verifiable proof of currency purchase, organized currency, and an informed understanding of the various exchange choices available. The journey from years of speculation to the current phase of operational execution is nearing its most critical point. While no one can pinpoint the exact hour or day of the global activation, the alignment of indicators, the active system testing, the coordination among international partners, and the phased approach provides tangible evidence of progress, not further postponement. This moment demands a combination of readiness and emotional control. The greatest opportunities are often realized by those who approach them with a clear, informed mind. The confluence of structural readiness in Iraq and the synchronization of systems internationally points to the imminent confirmation of what has been a decade-long wait for many dinar holders. The evidence suggests an active, coordinated progression. The final word of guidance remains patience and preparedness. Do not allow emotion to dictate decision-making. The best opportunities are often accessible to those who are calm, organized, and fully informed. Stay sharp, stay ready, and know that your preparation today will determine the smoothness of your process when the window for the Iraqi Dinar Exchange officially opens in this pivotal year of 2025.